Feels kind of weird. Can you guys hear me? Do 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 do. Let me know if you guys can hear me. I'm trying to probably do a stream with that music, but I feel like it's kind of weird. Can you guys hear me? All right. We're going to wait for maybe a minute. I don't know. We'll maybe wait a couple more minutes for people to join. But I am going to go through my Twitter. So so this is what I do every weekend. Always do my weekend charting. Sometimes I do it on Saturday, but most of the time it's on Sunday before the futures open. I don't really trade futures, but I would be, doing my charting. Got the webcam working, yeah. I'd be doing my charting while I watch football. So there's no football on. The All-Star game is on for basketball later, but a little bit too late for me. But I will also be posting what my charts are saying to my Twitter simultaneously. So you submit a request on Twitter, it also works for the purpose of the stream. You can also just type it in the YouTube chat, and I will also post on Twitter if I think that it is significant. I have both. Let's see. So I got two setups here. I got my Thinkorswim chart here. And let me just, let's see, window capture there. And I got this chart here too. Got my trading view. So we're going to switch back and forth between them. And I don't know, is it kind of weird with that music? I feel like streaming is kind of weird with that music. Is that just me? Because I don't know. You're here for your lessons. Thanks, Oscar. I also don't know how delayed this. I don't think there should be a delay. It should be maybe a minute long. But I'm just waiting 2 more minutes before starting. And usually, like, I go pretty fast when I chart, but I guess this time, because I'm doing a live charting session, I'm going to explain a little bit more like what I'm seeing. I just ate some Cajun food and I kind of left it so I can come to you guys. That's how much you guys mean to me. Because that Cajun food was real good. Real good. But I'm going to explain a little bit of what I see and where I think we could be going in the next, week or so. I think my intuition basically is that we're going to have a little bit of a bounce on Monday and Tuesday, maybe just Monday, to be honest. And then we're either going to chop for the rest of the week, and then the action on Thursday and Friday will be determinative for going forward, what kind of market we'll be in. If Thursday and Friday we sell off, then you will just experience again what we've experienced this last week. But the most bullish action is basically sort of what happened in September. But anyway, I'm getting ahead of myself. I think we have enough people in here at 8 to get started. More people will join if they want. It's Sunday afternoon. Very quiet, lazy day. Okay, let's get started. We're going to start. Oops, I just opened my Word document. I don't need that. We're going to get started with QQQ. I like looking at QQQ because that's where the action was this week. And we're going to look at my TOS chart. So my TOS chart obviously is where I trade. So I have a lot of lines. And the lines are not all super significant. They have varying points of significance. When you look at my trading view chart, it's a lot cleaner. Actually, let's just turn to the trading view chart first. I think that makes more sense, so you can actually get a sense of how, like, what it looks like from a macro perspective. My trading view chart is all macro. Okay, so I'm looking at this chart. The first thing that I notice actually is the volume. I always look at the volume. And if you were trading this last week, you can tell, you already know that the volume was very large during these days. And also, I'm looking on this screen, that's why my head is turned. And it was large at the end of last week. I posted a chart on Twitter Friday, I believe, not 2 days ago, but 9 days ago, that basically showed that we had this little, if you look at the 1 week chart, we had a break of this trend line, this weekly trend line. Again, we had a little fake out reversal here, which was cool because it allowed for continuation up. But we had a significant break on volume and we had continuation. So we actually have 3 weeks down. So if you guys they're following these rules, like oftentimes we get 3 bars down or 3 bars up and then a bounce. And then we have to wait to see after that bounce what direction the market will continue in. So we have 3 weeks down, so I'm expecting a bounce. We also have a 3 week down, and it basically, actually look at that. I didn't notice this before when I was during the week, but we actually recovered the 21 EMA on the weekly chart, which I think is pretty significant. We also had a little bit, I mean, it's tough to say if this is a false breakdown or if my demand zone is actually a little bit off. You could probably actually expand the demand zone to incorporate that wick right there. And then it would probably be better to incorporate the previous supply zone. So the previous supply zone being where these upper wicks are here, that would be your supply turned demand. So that makes the most sense. So if you look at it from that perspective, then we actually didn't have a false breakout. We simply had what you would have expected in this zone here. And this zone, if you look at the daily chart here, is from that September period. In September, we had this really big breakdown in the Qs also. We had a reversal, more evening star candle followed by 4 days down. And then we had a little bit of a bounce. So again, this day is actually not a red day. This day finishes green. It's above, it's a green, the candle is red, but in terms of the percent gain, it's green. And then we had 1, 2, 3 days down, and then we had a bounce. Here we have 1, 2, 3 days down, we have a bounce again. The question is, do we get continuation up? I'm guessing yes, at the very least yes, on Monday, at least initially. Are we going to hold it? Who knows? But I'm looking for, at the very least, a retest of this line right here, 311.30. And if we are lucky, we'll get actually a retest of 317, 318. Now, I'm sorry if it's loud outside. I have my windows open, but the problem with where we're at now on the daily is that we are below both the 21 and the 50 moving average, and we're below this trend line, the weekly trend line that I was pointing out. So we would need to recover a lot of ground. Maybe the most, so we have a couple targets here. We have a few targets that we just established. We have this 311 line, this confluence of moving averages here, which is around 317. And then we have this demand zone around 324, 322, 325. So I'm not, and then we have this gap up here, which is around 330. So we have a lot of different like levels to this market, and that's what we're gonna do. That's what we're gonna pay attention to in the week coming up. Like, how many levels can we recover? And the question that I ask myself is, okay, at what level can I resume putting on risk overnight? At what level do I feel comfortable swinging? And there's a couple answers that I think about when I look at this chart. One answer is we have a consolidation above demand here, very similar to what happened in September. So here's the consolidation period in September. I don't have a box. I could draw a box here, but I don't need to because we haven't reached that far yet. We could have a very similar consolidation here above the green demand box. And that, for me, after we see a little bit of some fake breakdowns, then I would start to feel comfortable. Like, okay, we've tested the demand zone a few times and we haven't broken below it. Then I can start putting on risk. Another option is that we recover. We have to, like, in order for me to feel comfortable, really, we would have to recover essentially this gap here, which is really difficult to do. Maybe just the demand zone. Like, it's a tension between this gap and this gap right here. If you guys see, sorry, it's kind of this gap right here, and then this demand zone. This demand zone is where the supply zone. This supply zone is where the daily resistance is, but gaps are also important. Usually they get filled and then we continue lower, we roll over. So there's a lot of resistance above that I'm not really happy about. And people on Twitter are right. It's going to take a while to constructively rebuild this chart because it really got destroyed. We did have a really big buy bar here, which was good on Friday. It closed well as well. So I felt comfortable swinging because we were in oversold conditions. If you look at the daily chart here, you see, actually, no, it's not exactly, but we're in this area. We haven't reached completely this area on the RSI where you would expect a big bounce. So right into the oversold area on QQQ, it's around 30. When we get into this 30 area, that's when it looks like we get really bought up. Like the March, is this March? Yeah, the March low. The March low right here, the RSI hit what? 27, and our RSI hit 33. Like, we were pretty close to where in oversold conditions relative to the March low. It shows that we still have we could have a little bit more downside, but there's still a lot of fear shown in this chart, I think, especially when you look at the volume profile and see, like, compared to where we were in March in terms of the sell volume, like the biggest sell bar actually, like right here, February, there's only one bigger sell bar in terms of volume, like right here, compared to this one right here. So there's a lot of fear in this chart, and I felt comfortable buying it just for a very quick bounce. Because of all the overhead resistance, I'm not holding. I'm just gonna sell it on Monday or Tuesday, even though I bought out longer dated. Like, in reality, I should have probably just bought all April, and then because I bought June and July contracts, but I should have just bought April closer dated to get more profit from it, and then get out when we retest these zones. So that's the QQQ chart. Going to tweet about that, so you guys have to deal with me tweeting as well, because I gotta share this for my followers too. For my followers on Twitter who are not following on this live stream. That was, so I'm explaining concepts in the beginning of the stream. Once the concepts have been adequately explained, I will just go much more quicker through every chart, but I feel like I need to explain at the very least my thinking, so that you guys understand the language that I'm using. I guess we can get on the same page. All right, let me tweet this out. For a bounce, overhead resistance is at 311, and the moving averages around 315, then overhead supply. Boom. Tweet. All right. If you guys are getting notifications from Twitter. All right. I haven't looked at the comments. VIX OPEX Wednesday. QQQ is basically all tech. Yeah. Yep. It's a tech components. There are obviously, like, you know, Amazon is in it, which is not considered tech. I guess it's considered consumer retail. But it's basically high growth stocks. Yeah, there's no financials in here. All right, let's turn to SPY. Thanks, Alex, for the explanation. Feel free to. All right, let's look at SPY. Obviously, there's a couple interesting things here from the get-go. Let me see if the chart is right. Okay, SPY chart. I'm sorry, my lines are really all over the place here because when you zoom out, it'll make a lot more sense. But the first thing I notice is, again, the volume is lower actually compared to the NASDAQ chart. There's not the same amount of fear in the SPY chart, which includes the financials, which includes the industrials, materials, all these things that have been holding up relatively well in the last couple weeks. Let's look at the weekly chart first. All right, so the weekly chart, we actually had a really nice bounce, and wow, believe it or not, we actually recovered, it looks like, this primary trend line. All right, so I got multiple trend lines going on. We got this nice little wedge. This is like now 10 years back. We got this megaphone pattern, which we broke out of. We have a trend line connecting these highs. We have a trend line connecting these highs, and we have our primary trend line right here connecting the resistance around here. So we have a lot of trend lines that we're working through, but all I'm looking at is that, okay, we're healthier because we recovered, and by I mean we close above. Oh, we're doing Union Dot, don't worry. We're above the resistance. All right. Now let's just go here. I hate this chart on TradingView because there's so many gaps. But so actually the first thing that sticks out to me here is if you look at this candle right here, this candle combination, and then you look at this candle combination, we actually have very, very similar candle combinations here. And for me, that is significant because oftentimes, you know, history will repeat. These candle combinations actually mean a lot, and it's actually at the same relative price value. So around the 50 EMA, the 50 moving average. So if history repeats, we will have a nice little bounce and follow through, and we'll get these like nice little bunny hops is maybe what we can be targeting. So the first target above would obviously be 387. 387 would be the first resistance, and then we would have that price be the pivot to test at the high. So the pivot would be testing around 392. So 387, 392, those are the levels on SPY that I'm watching. Below we have, it looks like around here, which is the gap here, and the close of Thursday. So 376. We have 378 here, 376, and then a little bit lower, 368, which would be brutal, 368. So basically pattern recognition here. I mean, you just got these two candles, boom, boom. Let's see a little bit of continuation. Obviously, this chart is much healthier than the Qs. We are in the Qs, just really quick, we're below the 50 moving average. It's acting as resistance here. SPY, 50 moving average acting as support. 21 as resistance. So quick takes here. All right, we're going to go a little bit faster now that we got through the market conditions, which both are signaling a little bit of overhead resistance, but short-term upside. Let me find my SPY chart. $387 pivot to test at the high at 392. Lower support is low of day, Thursday, Friday. All right. All right. Now we're going to get into some of the bigger names, and we're going to go a little bit quicker here because this will take forever if we don't go quicker. Boom. Okay, I hate these little wiki candles. Like, this was not the close on, or like, this is not the range that Tesla had. It's just a misprint, or like someone sat on a button at a hedge fund and they got fired the next day. One or the other. Unfortunately, my fibs now, whereas before, you know, it looks a lot better when you're up here playing in this range, but now it's just really confusing. So that's a little unfortunate. Let me try to evaluate what we got here. I might actually, let me just turn the opacity down on these because it's like way too difficult to see in the price where we actually are at. Got to turn that opacity down. There we go. That's much better. Okay. Okay, the first thing that I notice is obviously the big sell volume, increasing panic, but we also have, you know, this really oversold RSI, but we don't have really a confirmation of any type of buyer stepping in yet. There's no, like, if you think about Tesla chart relative to QQQ chart even closed green. Tesla chart did not. Tesla price did not, rather. The main thing that I'll be looking for is this area right around here. And the reason I draw that is this volume zone right here. I would like to see us recover basically the high of day Friday, which is around 625, so we can get back up into the 676 area. If we are, you know, if we have a weak bounce, even 676 bounce, the possibility of us actually touching the 200 moving average is very high. This is just an ugly chart, to be honest, because we have, you know, we have gaps up here and then we have gaps here. So we have an extra added, you know, zone here, which is really not great. So that's sort of my evaluation. The best case scenario is that we consolidate in this zone here. Worst case scenario is that we bounce and then flush even lower. And then this green demand zone will act as resistance later on. So let's just tweet this one out too. Boom. Okay. I don't know if I have a chart actually. Oh, hey, look, I actually do. Okay, so basically you notice that 676 comes from a fib level. It also happens to be the volume of the bear flag. Where the bear, like where the support, the previous support from the bear flag was. So that is why it's acting as the pivot for me. I don't know if that's clear. So like right here, that's the support on this bear flag where people were expecting it to bounce, but we flushed below it. So now we need people to, we need the bulls to reclaim that level there, basically. All right, next chart. Amazon, I've been waiting for this. We got the wedge break, and you know, wedge breaks are what they are. I mean, that's a really clean chart. I think if you zoom out more, you know, we're actually, you know, it's not a great chart because we are actually below this 200 moving average, I believe. Oh, actually, no, look at that. Look at that. That's interesting. They wanted to save it at the end of the week. All right. Again, though, we have 3 days down, expecting a little bit of a relief bounce here. The chart is tough. I mean, we hit the demand zone. That's a plus. But we broke this triangle the wrong way. So, I mean, we got some problems there. The one good thing is though, we have actually bullish divergence on this RSI. If you look, it's barely, you can barely see it, but the low here, that's one low, but we actually hit a lower low, but then the RSI did not. So there are buyers in here. It would be very interesting to see us retest what I think has been the magnet, the price magnet, which is like you see all this volume in this area, 3192. 3192 is basically like if you're on Thinkorswim, the volume profile, what is it called? Point of control. That is 3192 on the Amazon chart. So if you're bullish and you want to see that, and you want to use this demand zone as your risk spot, which is, I think, a very good risk spot because of all these wicks in this area and because of this low here, no lower low, significant, then you can target first, obviously, this bear flag, right, resistance right around there, 3138, and then 3192 would be the underside of this triangle breakdown. After a retest of 3130, potential to again flush. So I would be cautious though. Some mixed signals, I guess, is the best way to put that. I think. Best way to put that. I like the triangle look on that because it's a very clean look. There's a couple other ones that have very clean, obvious triangle looks. And actually, so my tweet from previous says, this is from February 28th. Amazon, probably not what we were all hoping for. Talking about the triangle break, 200 EMA demand zone confluence, would like to see it hold 2,900 below 2850, and we could flush to 25. All right, so we actually held that 2850. Amazon held 2850 demand confluence. Some mixed signals. Looking for 20. If you have questions on the Amazon chart, send them in right now. 3130, then 3192. Bearish below 200 EMA. Boom. Any questions on that chart? All right. If you have a question, I can go back to it. All right, let's go Facebook because I think this one is interesting. Actually, very interesting. What do you notice? Pop quiz. What do you notice about this chart relative to the Amazon chart? I mean, we can just like really quickly. Okay, Amazon, Facebook, Apple, Facebook, Microsoft. Oh, that's actually interesting too. Netflix, Facebook. All right, so we got Facebook. My point being, it's actually, look at these green bars too. Like that's actually very significant, I think. Very, very interesting. We have actually some accumulation, a lot of bullish signals. Look at that. We got the higher low on the RSI. We have the 200 EMA consolidation. Man, I think that this one is a really good candidate for next week if we get a bounce, like I'm thinking. I like Facebook next week. That's probably the best chart that we've seen so far. All right, let's put that into our. We've only seen what, 5 charts so far, but still. Holding 200 EMA nicely. I like this one for next week if we bounce as a market. Nice relative strength. And if you notice on Friday, actually, Facebook was green along with Google really early, even before the flush. So good stuff. All right, Google time. Another good chart. Oops. What the hell is GOGL? Good chart, though. I don't know what that was, but it was an interesting. Look at that chart. All right, anyway, I'm getting distracted. All right, this is my Google chart. You zoom out, you got a nice little, so this triangle broke, this rising wedge broke out to the upside. And we actually have I don't like this line anymore because it actually failed. So if it fails, don't mess with it. But we do have the demand zone held. And it looks like, I mean, I got to draw a pivot in here somewhere to help myself know when to enter. And I'm just going to go here, 31.23, 1, 2, 3 touches there. So 31.23. My target is up here. We got some nice targets, 22.50 and 23.78. That's actually a lot of some interesting targets there. Wide range is what I'm trying to say. The fact that it's holding its this gap here is insane. Like in this market, that's great. I mean, that's what you want to see. Again, we're looking for clues about where we could trade next week. That's all I'm doing. And it looks like Google and Facebook, I mean, they sort of showed their hand on Friday. And that is what I like to see. Google, nice RS, like Facebook, held earnings gap, looking for 22.50, breakout at 21.30-ish. Cool. We're moving nicely. All right, let's look at NVIDIA next. What an ugly chart. All right. I noted, let me go. Even below the moving averages. Okay, let me just go back to Facebook really quick. Yes, because we have, it's not extended. It's not extended below the moving averages so that if it bounces, it'll act as resistance. Instead, the moving averages are compressing and it's not moving the price down as well with it. Like it's not in a downtrend. The fact when you're in a big uptrend and the moving averages start compressing, that is when you want to enter, because the risk, the possibility of a big move is heightened when you have compressed moving averages in a consolidation zone, which is like Facebook is in a consolidation zone here. It's not in a bearish market. It's in a consolidation zone. So you want to see these compressed move. Look at this. Let's just go back here really fast. Try to, like, this is the sort of thing I'm talking about right here. So we have like this holding this zone, and then we have the moving averages, you know, sort of compress. And then we have a little, you know, once it recovers those moving averages, boom, the buyers start coming in. That's when the momentum happens. That's what you want to see, really. You have another one right here, right there. I mean, this is an uptrend, but yeah. I mean, there are clues, context clues here. Like this is the best context clue, I think. Like after this big gap down, you're like, shoot, this chart doesn't look good. But if it holds this zone here, like you're Gucci. Anyway. Moving average compression. Tips and tricks. All right, NVIDIA. I hate this chart. I hate the name. I used to love it. I hate it because, well, you know, the semis actually showed moving average, or showed strength on Friday. They were green for the good part of Friday. But anyway, it's very similar to Amazon here, where we have the 200 EMA held, and the demand zone held. The problem is that we just got so much resistance above. I mean, we have basically this volume. I don't have a line here, but this whole thing is all volume resistance around, you know, 530-ish. And then we got this demand zone, which had struggled to break out for like 6 months. You know, 570, 568, I remember. Then we got that at the high 610. So there's a lot of problems in this chart. A lot of really bad signals on the internals. So I'm not thinking about playing NVIDIA right now. It would need to show me something different than what it's showing me right now, to be honest. All right, let's pull this up. NVIDIA. Come on, do that. NVIDIA held 200 and demand, but a lot of resistance above. 538 is volume pivot, but not liking it for momentum plays at the moment. All right, cool. That's my summary of the NVIDIA chart. All right, let's go to AMD. No, shop. Let's go shop. Another interesting one. Wow, that was weird. It sort of switched on me. We got 14 people right now. Welcome, everyone. If you want to say hi in the chat, say hello. All right. NVIDIA, or sorry, shop. Okay, so we have this. Let me see if my chart is right. Making sure I show everything. Okay, so we have, high, low here, fib. We have high, low here. And now we're going to have to make another one. Unfortunately, we don't know. It hasn't confirmed to be a low yet. So I don't really like drawing the fib until it's confirmed as a low. I like drawing it after. Yeah, so we're going to wait on that. I have some other lines here from before, and you can see once we broke through this pivot, yellow lines on my charts are pivots, and pivots, by that I think of them as floors, ceilings, and you're in an elevator. You're passing. You can enter, or it's like a door or a trap door on the ceiling or floor. Once you go through it, you can enter the room above or below or whatever. So you can see once we fell below the pivot at 1225, we flushed to demand, which is very common. Once over here we broke above the pivot, we raced to the next level above. Like that's what pivots do. Learning to recognize them is very helpful. All right, so we have our pivot here. We had actually a 200 EMA touch, which hasn't happened since April, which is insane. I'm just going to say 1220 is my pivot for the week. Very simple. Hi, Poppy. What's up? 1220 is my pivot. If shop is around there, I'm staying out, waiting. Like, you can play risk to pivot. And by that, I mean, okay, if my risk level is right here, this low, right in there, 1080. Okay, 1080 is my risk. 1220 is my target. That's how I would set up a trade there. After 1220, I want to wait to see if it consolidates, rejects the pivot, breaks the pivot, whatever. Then I would look to see if we can get into this 1320 area. But there's not enough signaling for me to be like, I like this one for next week. Again, also the spreads suck in shop in general, so not really trying to mess with that this week coming up. I don't have an updated shop chart, so shop 1222 pivot, held demand, and 200 EMA, but not a lot of great signals on the buyer front. Sure, I mean, like the easiest supply and demand way to draw supply and demand is by using previous points of resistance. Yeah, we can do clove. Why not? Is based on the previous, demand. So, I mean, if you just I wish I could completely clear off everything and then show just the price, but I can't. So here, I mean, you have this area held here, it held here, and it held here. So that there, that's the demand area. Like that's where the buyers came in and supported it. Above, you have rejected here, and then you have demand test here, demand test here. So previous resistance became support. This was the igniter candle right there. We have a breakout and a back test, a second back test, and then a launch. And now we're retesting demand. That is my very basic explanation of this chart right here. Yeah. Maybe we can look at clove and look at supply and demand. So I don't think I have it marked out on this chart. Okay, I have a little bit. All right, so we have demand here. It was supply, but overhead it was initially rejected here. And then we have definitely supply up here where it was rejected again. And I put this demand zone in because of the mini rejection and the gap where you see these like little wicks right here. That's sort of like, I can expand it actually here. Let me see if I can. Come on. Why is it not letting me pull this up? What in the world? There it is. Oh, that's why. Like it's like right in, like it's that whole thing right there. Like that's pretty much what I'm referring to in that chart. So you have like obviously resistance here, IPO or SPAC, when it was still in the womb, the SPAC womb. It gapped below, not a good sign, and it held this area. So this right here is actually a pivot on. It's like a pivot in the sense that if you're below it, you don't really want to own it because it can like, this thing can just tank. I mean, you don't know where the bottom is on this thing, but when you have it around here, when you can get out. Here, you're just hoping and praying. I mean, that's pretty much what I think. There's no signal anywhere for you to know where the bottom is on this chart. So personally, like, I mean, you can get some nice risk reward just based on the fact that it's $6 at some point, but it's not, from a technical analysis perspective, it's not really, it's not helpful just for it to be cheap, because cheap can always get cheaper. So, you can try to play a bounce here back to the pivot, like as an options play. You can try, to get up to this $9 area, buy in the money calls, buy it around like, $6-7 in the money calls, and try to get back to that $9 area. It's basically the same thing as trading 100 shares on Clove. So that might be a play. Because of the highly oversold readings here, it might be a play. Probably not going to tweet that out though, because I don't see anything that I would recommend to people. Okay, we'll go to Diz. I'm taking recommendations, just throw them out there. Diz, obviously a much stronger chart than the tech ones that we've seen. Very similar to Google, we had this little triangle breakout. Actually, I'm not a big fan of, let me see if I can. I'm not a big fan of my triangle here because it's not accounting for this price action here. Yeah, I just put that out there. I'm not a big fan of it. It's not the best line. This line right here is fine. I mean, it's connecting previous highs, but the bottom one, it's kind of whatever. It's connecting this low and that low, and then that's pretty much it. I mean, maybe this part here too. Not my favorite. Anyway, so we see the C to what I call pivot points. They are, let me just turn back to, like, I mean, they're just points. Pivots, they're not like some voodoo or whatever. It's just basically points of significance that you can mark out on a chart. Like if you see, it's a point at which you can say, if we're past this, a breakout is imminent or a breakdown is imminent. There are pre-built, yeah, those are based on formulas and like person's pivots, whatever. You can use those. Anyway, let's go back to Diz. I like to use my own. Pivots just by experience of understanding where the breakout zone is. Sometimes I call them pivots, sometimes breakout zones, breakdown zones, whatever. And we have like, daily pivots, whatever. So, I mean, like there's just like a lot of terminology that I've developed over. It's just for me. It's not something that is taught, I guess. Okay, so for Disney, I mean, like an easy example of this chart right here, we have a pivot, it's just basically like an at the high breakout. And at the high was right here, 153. Once we broke out 153, it's much harder to see. But I mean, you're basically in my world, you're targeting this lineup here. Like after we break the 100 fib, you're looking for the next extension, which is up here, which is what we touched. So the trade would be, okay, let's get in here, let's get out there. A better example would be, this trend line worked. I would be entry here, then exit there. But anyway, I like the charts because we're basically back test this breakout and we're holding the 21 EMA. I personally, I don't see a trade in it just because like this zone right here, like it's a mini zone, but it's like, okay, we have fib resistance. That's what I'll call it. 199, 200. It's also a little bit of like psychological resistance, that 200 level, which unfortunately is true. But if we're able to maybe like consolidate a little bit more here around the 194 area, then we can see a setup to break. And then again, we would have like 200 trigger, pivot, trigger, whatever, to that 215 mark. So that's sort of what I'm looking for. I'm not going to leave this in because it's a little bit deceiving. It's just a little bit of a fib touch. Probably, I don't know if it's worth tweeting out for me right now. I'll think about it. I want to do a bank actually before Dash. I'm going to do a bank chart because we have to sort of show what happened with the banks, I guess. Let's look at GS. I played this actually. I played a little bit of the you can see I marked out the bearish divergence here on the Goldman Sachs chart. And for me, like the fact that it's at this crazy trend line resistance, like this is actually very significant bearish divergence. Like this is a really big, really extended chart. Like that's pretty much the best way to put it. It's very extended. You can see the buyers are drying up here and the RSI is showing that. To me, it doesn't signal too much because like I'm not going to short long term of the chart with probably the most strength just in terms of pure price. I'm not going to short it, but I would play the divergence play, which is what I did. Just like, playing these upper wicks here, looking for a little bit more of a back test of the moving averages because it was so far extended. And that's what I did. We were able to make some money on it. But, in the short term, you kind of want it to hold 323 if you're bullish on it. Hold 323. That's just my own price level. You can also draw a little bit of a demand zone at the previous resistance. So like right there. So we got 305, 306. Obviously there's a gap there too that needs to be filled. Maybe it was filled. I can't tell that much. Actually, it looks like it was filled. But anything above 305, it's healthy. I think we might see a little bit consolidation in the banks this week, especially if there's a bounce in tech. That's sort of what I'm expecting there. I'm going to tweet this one out. And then we'll get to Dash and PayPal and some energy. Oh, that's not it. Actually, I think I have to attach it to this one. I mean, I hope this is helpful for you guys. It's taking a lot, it's been an hour already. But, it's taking a lot longer to go through these charts than I normally would. But I hope that me explaining some of it is helpful instead of me just like being quiet and looking at the chart and then being like, oh, good, bad. Bearish divergence gave us a little profit off a pullback to moving averages after it was far extended, expecting some consolidation here above demand, maybe signaling a tech bounce while financials cool off. That's sort of my analysis of that Goldman Sachs chart. All right, let's look at Dash now. Interesting chart, just to know. So in answer to your question, Joe, the target would be this demand zone right here, which was also happens to be the IPO. Like I could extend it out here as well, like right there. Much wider range than I initially put out. I think it's more accurate though. So basically, like, this is holding well. Like, That right there is holding nicely. Probably too big. I think, if we break, let's see, kind of tough to say because we rejected up here as well. So we have, and we also have a little bit of a gap here. So let me just put that out. So this is gap rejected once. So if we get over this gap, which is around 160, then we could see 170. But what was your question? Your question was if we were to break 135 on the downside. Oh geez, I don't know. Let me how would I evaluate that? I would have to do over a kind of tough to say. Something like that. Just like that, maybe. Yeah, like this. There we go. Okay, yeah, that makes better. Okay, so we have this 141 rejection, and then lower than that, it looks like 90. I mean, I would expect some psychological resistance around 100 for sure, but that's my best impression of a bear. I would just have to flip the chart upside down. 90 it looks like. Yep. So if we break down below this demand zone right here, it looks like 90 would be in play. That would be my target right there. Okay, PayPal. PayPal, we have the this is not the earnings gap. Wow, the earnings gap got destroyed actually. I hate this chart just because of the amount of gaps in it. Let me just, do I do futures? No, I don't trade futures. I'm scared for SPY. Thanks for getting I play some, I don't play XLF, I don't play sectors that much. I will play the specific names and sectors that have the best price action for my trading style. Mainly it's, in the financial world, it's Goldman Sachs. And in the industrials, or like in, with all the travel, I like Boeing. So that's pretty much what I've been playing. Okay, so PayPal, you can see that it held above this area here, which would be, again, where I would, hope it holds. Demand zone, this would have been a nice dip buy. I actually had a trigger on my, okay, let me just pull up my Thinkorswim really quick because I think I had, yeah, I did. Man, I missed out on that actually. So let me just pull up this 5-day, 5-minute. Look at that. So it's actually the 0%. And so for me, 0% is significant because it's where the buyers held last time. Okay, so it held here and boom, we held here again. I mean, that's just like really, really easy trading. Like, okay, let me just use this low here as my risk point and, use it as a bounce spot as well. Like that would have been what, like a 15-point bounce. I looked at it and I took Square instead, and Square was a great trade. I took Square instead. It was a great trade. But I mean, this is just such an easy bounce spot. And like for me, like if I'm going to take a bounce on fear, it has to be at a point of extreme significance. And extreme significance would be, again, that PayPal spot that I marked out. That was a great little bounce play we could have played. Now on the long term, I mean, I'm not really excited about it because it's really far extended below the moving averages. I would expect the bounce back up into this resistance zone here now, which is around 250. So that's sort of what I'm looking for. It would also, this chart, I mean, Bitcoin was strong all week, pretty much. I mean, it was strong all week and PayPal still sold off. I mean, that's really odd to me, but I mean, I like the company. I like the company. I use it a lot, but I mean, in a long-term account, sure, I would dip by it like right now. Yeah, I would dip by it in a long-term account, but in terms of trading, I mean, it's very difficult to actually ring out something there. I mean, like we have room 234 to 250, but the risk to reward is not good because 234 to 250 is what, 16 points? And the risk is back to that demand zone, which is around 215. I mean, at 215, your risk is so good. but bounced beautifully out of demand zone, but a lot of overhead. Not too interested in it here. 250 can reject, bring in more downside. Okay, let's go through some more charts. TA doesn't work with the ER plays. I mean, like it does because, I mean, it's still people. It's still there's still buyers and sellers, so you can't predict which way the earnings going to move, but you can predict how. You can note, like if you look at the earnings, it'll go. When it falls, it'll fall back to the previous demand level. When it goes up, it'll hit the extensions or the previous support or the previous resistance as well. Plug, man, this one's so disappointing, but there is some hope. I don't see much hope actually. Never mind. All right, so we had this bear flag breakdown, which we've been tracking. This right here also is another bear flag, obviously out of the. So this is like, so with PayPal, this is what I'm afraid of. This is exactly what happens in these types of charts. We have a strong bounce out of demand right here in plug. Sorry, my cursor was in there. We have a strong bounce out of demand, but we are actually creating basically a bear flag. Bear flags, they bounce at the appropriate levels and then they'll sell off and we'll create a lower low. So that's what happened here. A little bit of bullish divergence. I mean, slightly. As we're holding this area, which is great. I mean, we're holding the gap, but we tested lower already. Let me just try to evaluate. Again, like we can again backside test this EMA around like 48 or whatever, but I mean, you could play 48 with using this gap here as your resistance. So you got 3650, use that as your risk, play 48 maybe. I mean, but in terms of like where we're at right now, there's no signals to, unless you like extremely believe in the company, you're just like, I want it now. But I mean, like I said, the chart still is signaling that we could have a little bit more downside with that 200 EMA still in play. That's what I think. I'm going to look at NIO next. Completing a bear flag. Don't really like it going forward because of the possibility of testing 200 EMA, but we have short-term target of 45.79. Okay. Let's look at NIO. Wow, what a chart. Just completely got evaporated. Oh, man, I'm like shaking my head at this. I never thought I'd have to draw that again, but here we are. Okay, the good news first. Good news is we sold. I gotta change this actually. We actually no, that's not what I want. There we go. The good news is that we filled this gap here, which was not filled before. It looks like it might have been filled, but yeah, we got another lower one here and here. Anyway, the risk to reward is very good here. I think we have that 200 moving average touch. It closed above. You see these wicks right here. 1, 2, 3, 4 actually. 4 points. It closed right above there, like that low. So that low is $38. Okay, so 38 is your risk. And we are so far oversold in this chart that we could get a nice little bounce up in here to, I don't know, 48, like filling this gap up here, maybe. That would be the 50% retrace. That would be a very, like a trek up a mountain. But like I said, the risk to reward is okay. 38 is your risk. Like if we gap up on Monday, which I'm expecting a gap up actually. If we gap up on Monday, you know, we could open at 43. Then your risk to reward's kind of messed up. Like because you can't 5-point risk, 5-point reward. It's not the greatest, but this is why it's tough. You know, on Sunday you're doing your reviews, but you know it's going to open at a different point than where you are charting. Okay, so NIO 38 held for now, looking for a bounce to 50%, retrace to 48. Hope we hold demand, LOL. All right, that's what I got for you guys there. All right, let's look at the comments again. Oh yeah, let's do BA. I like BA. Okay, we can see rejected the pivot. Boom, that's what you're gonna be looking at there. Let me see if my chart is correct. Okay, we rejected the pivot. We still haven't hit this demand zone. It's kind of weird. I expected it fully to hit the demand zone. We had a really rough day on Friday, I think. Really rough. But okay, so what I don't have it marked out, but you can see these points right here. You got 1, 2, 3. Then we have resistance 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Okay. You asked earlier, how do I mark out pivots? That's exactly how. I just like look at the chart, look at where the price is reacting. Boom, there's your pivot. This is a really rough pivot because there's so many mixed signals. Like it's not going to be helpful for me necessarily because even if we break lower here, we have like this area right here. Like I'm just drawing lines now because like, I mean, you have this area right there. You got 1, 2, you know, so it's kind of like rough. I would rather just keep this chart on TradingView cleaner, but if we consult, let me just scroll back here. Man, this I can't wait, guys. When we break this gap down zone, this resistance at around 250, oh boy, 309, like the next week. Clip it right now. Put it somewhere, and I'll let you know when it happens. But if we are ever close weekly above 250, the next week 300 will come. Like that's pretty much what I'm thinking right there. It might be like a quick test of 300 and back down, but like right there. But it's gonna happen. So that's sometimes you just gotta be patient. Don't trade this messed up stuff right here. Just wait for that opportunity, and I think it'll come. But you know, who knows? Maybe it'll never come. But I'm telling you, if we break that 250, we're in for some good stuff. Short term, we got a lot of resistance above. That's pretty much oh man, let me just go back actually here. There was a lot of flow in BA. It was really odd. Never reached 240, man. Long term, if we break 250, we will see 300 in a jiffy. Okay, next, CCL rejected. I started see like in my normal charting session I won't do CCL because I already know what it's saying, but it's harder on this chart because I don't have it pulled up. Let me pull up my other chart actually. I'm just going to show you it. I'm not going to mess with it though. Okay, you see 50% retrace from this gap down. Man, I need the three day. All right, we got this 50% retrace. Oh, that's one thing I didn't do on Boeing though that I should have done is draw that fib. I should have done it on Boeing. Oh, I do have it. Never mind. Just kidding. Okay, anyway, CCL rejected the 50% retrace, which is a very significant level on the climb back up the mountain. And we got a pullback. So, I mean, as long as it holds above here, which was the previous resistance, 25, we're okay. 25-ish. If it holds, we can continue the trend up. I mean, this is just like a little bit of a higher low right here relative to that one. So I knew that we were at resistance here, and I didn't short it. I didn't think we were going to get that big of a flush, but anyway. Let me think about some more charts. Some more charts. I gotta look through my watch list here. Oh, ZM. Let's go ZM. ZM is rough. Really rough. Didn't do what I expected it to do at all because we got like mixed signals everywhere. But earnings sell off right there. Gap and supply demand retests. This gap is actually a demand zone as well. I feel like I should mark it to make it more visually pleasing, like sort of like that, but I don't like that. It's going boom. Okay. I'm trying to figure out what I think about this chart. I mean, the company is fine. A lot of reactions, I think. A lot of emotion. I think in the long term, you might look back on this and be like, okay, we were in the middle of a basing period, like a long basing period. Like sort of like this, and we're just like chopping around in here. Maybe a little bit of fake breakouts up here, but and then at the end it'll be like this long consolidation. I mean, like that when you have a company move up 400% like that in a year, you're expecting that type of price action for the next year or something. So if we can establish this as the bottom of the range, we could have a really nice range trade. That's sort of what I'm expecting. And then all this like little like lines and whatever, all these lines that I'm drawing and all these demand zones and circles or whatever, like I think that these are largely useless though because it didn't really play out. So I just delete that. Like will become kind of pointless. So that's what maybe long term I'm thinking. And then we'll have another nice little breakout. I would like accumulate here for the long run, use that as your risk, and then you're fine. I mean, again, it's always about the risk to reward. If you like the company, accumulating here is not the worst idea. ZM after a huge run up last year, I think we are in for a good long consolidation period with 300 being the risk to the downside to 240. I just looked at the chart and saw 240 as the previous low on the way up. All right, next let's go. Let me see if there's any requests. PLTR. All right, we can do PLTR. Oh, Alex wants uni. I forgot. We can do uni too. And dot. Thanks for reminding me, Alex. What a weird chart, PLTR. Really weird chart. But so we got these retrace levels, these fib levels that I'll use basically. We have 2140, 2150, then we have 2377, above is 26, then we got 29. So I mean we're above that 50% retrace. Nice little consolidation here. I think I can, yeah, no, that's fine. Yeah, so right here I think, we just use these as pivots. So, okay, next we get 26, then we get 26, then we can see up here at 28. That's sort of what I'm imagining will happen. Got to use your imagination when you chart. And you have to have a very good imagination because you need to observe. You need to have an open mind. Think about what could happen both ways. Bounce to 50% retrace. Can see 26 and 28 on bounce. Okay. A lot of hammers holding demand zones. Okay, let's look at some crypto really fast. For Alex. Boom. All right. Wow, what a chart. I mean, like, this chart is just insane. Guess where I sold, guys? Can you guys guess where I sold? Let me see if I pulled it up. Yeah, you guessed it. Right there. Right there, baby. Right there. That's where I sold. And it's so funny. Well, okay. I said to myself, I'm going to sell when it closes the daily below the 21 moving average. Why did I say that? Because, it had held up here. 21 EMA. It held here. It held here. And it was holding here. But then we got this one little close, and I'm like, shoot, our risk right here is like up into this, Crypto is really crazy. You can't really predict. So, I mean, like, and then the next day we just, have a nice little bullish engulfing candle. So, you asked me what my target is. Oh my gosh, I have to actually think about it because my chart, my fibs are ending here. Draw some new ones. Boom. Okay, 33 break. Wow, what a chart. What a chart. Okay, 33 break. We got, looks like 42. Yeah, you don't want to get too excited looking up there. But I mean, like, what you want to look for, though, in this chart is basically hammers on the moving averages. If you are hammering on the moving averages, it means that buyers want in, and they just like are buying every time it touches this moving average. It's funny because I was using it as my stop loss, but okay. So they bought hammer, 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 hammer. It's amazing. The moment that we create like a bunch of these ones is the moment you want to get out. And we stop making these lower hammers, then you want to get out. But I mean, there's just like a lot of good things happening here. Good job if you're in. I think we'll test 33, maybe, consolidate a little bit more. But it looks like now we've established this zone right here as support, 26, 27-ish. Awesome chart. Good job. Boom. Had to create new fibs. It was so bullish. 33 test at the high, then can see 42, 40, 40. I usually put like 40, 42 because of the round numbers, but whatever. All right, DOT. Also great chart. Okay, so remember what I was saying about upper hammer, like wicks, whatever. Okay, so we got wick. This one's insane. I think it might have been a misprint, right? Like it had to have been a misprint. There's no way it wasn't a misprint. Anyway, hammer. Look at this. All right, hammer, 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 hammer. Doji, 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 doji. Moving average compression, bull flag break, boom. More hammers. Hammer here. Hammer, hammer, hammer. Okay. This is our first actual rejection wick, which is kind of interesting. And it's a rejection wick because there's no lower wick. And a lower wick would obviously create some type of doji or hammer. So I mean, like, there's a possible. It hasn't touched this 21. I kind of expect today that it would touch the 21 around 32.90, but it looks like we're in for a little bit more of a consolidation on dot. Still a healthy chart. Drawing it like that. Boom. We just got, and it's crazy. You can see how the breadth of the candles are expanding. Like, this bull flag is about this big. This bull flag is that big. I mean, that's a. So, obviously, like, if it breaks below, if it closes daily below 30, let's just say 30, like right here, you don't really want to be in it because of this zone right here. So right now it's holding that zone, this 3 bar, it's holding it. Below that, really dicey. I mean, like, the daily close, like, you can let it hammer, but the daily close kind of dicey. Anyway, the bull flag break. Again, I'm running out of charting material here. Yeah, that was a fakey one. All right, let's just go back here. All right, so we got our pivots. So 36, 30, 38 is breakout range, 38. And then we got 42 test at the high up to 50. That's sort of what I'm thinking with that area there being a nice little stop. But again, the chart's very constructive. So I think that dips would be bought even up into here, like even up into 26. But then that's just like a long way to go. It would be bought here too, you know? But anyway, nice little bull flag happening. That's the summary of that. Put that on the Twitter too. All right. Okay, someone asked, let me just exit out of these really fast and then I gotta see like what actually I need to look at. So we got Uber, maybe Google, we already did that. Microsoft, no. Let's look at some Chinese names. Baba has been having a ton of trouble. A lot of trouble. And I think I need to rethink some of these lines here. I mean, that line worked. Let me just remove this note. Okay, so we have the volume here. I think I need to draw it out. It'd be more helpful. You can see 1, 2, 3-ish. I mean, this is like a little bit of an overextension, and then 4 right now. So I mean, we have the possibility of a bounce. I hope we get a China bounce. That would be awesome. That'd be a good play. All right, so my target here would be 250 on a bounce. Again, I'm just looking to see what we could possibly trade next week. Baba, maybe a candidate. Can be that 250 level. Okay, Baidu. Oh, I want to look at some retail as well. This is the 1-day chart. Man, it looks like a weekly chart. That's kind of crazy. All right, so the first thing I see is this up here. Like all that right there. Which I don't really like, the fact that it's below. But then we have this right here. It's the same thing-ish. Yep, and then we have our pivot, which is this resistance point. Boom, that's how we just draw that chart. And this is created from this low here, if that makes sense. If you have a question about my charting, ask me. Okay, the problem with this chart is we also have a gap here. Purple. I don't know why my thing is like that. Purple. Okay, we also have purple's my gap stuff. Like that. So it's holding the 50. We get below here, that would be my target. I don't really see a setup here either. I don't want to tweet about that. Target had a nice, I remember it had a nice candle. Yeah, we got a little bit of a nice little demand zone here right at this previous spot, so we can see a little bit of a retrace. Man, target was crazy when I was trading it. It could have been bad if I didn't stick to my stops. That thing went down hard, like 17-18 points in an hour. I mean, my stop was like 2 points, and so I stopped out. I was like, I didn't think about it, I just stopped out. And then it dropped like 10 more candles down. I was like, oh my god, never seen that before. That was insane. Anyway, this is resistance up here, this zone. I mean, it's a little unfortunate. I like the name, but that sort of thing, kind of like, you know, when that happens, you kind of want to stay away from it. But 167, easy risk spot for an entry on a long bounce. A lot, I mean, the theme, okay, if you guys notice, this like theme is just like so obvious, where all of these names hit demand and we're looking for a bounce play. But that bounce play could be over within a day. Like, really. It could be over in a day, or, you know, Tuesday. That's why I'm saying, I said at the very beginning of the stream, I'm looking for a bounce Monday, Tuesday, then I'm out of there. And I think a lot of other people will be looking at the chart and saying the same exact thing. So, like, I'm not going to be mad. I'm not going to be mad if I make money Monday and Tuesday, and then the rest of the week I can't find anything. Because, like, that's what my charting session is telling me. It's like there's a theme. And when you chart stuff, there's a theme. Whether the theme is like solar plays, energy plays, bank plays, you know, fintech. You'll always see these plays pop up in the same theme, and this is the theme that I'm seeing right now. Okay, Roku, we're holding this area. Overhead resistance, obviously. Right there, you see where there was the previous gap, and then we got wick, and then fell through. Like, that's the sort of thing I'm talking about. Okay, you can see these hammers here, but like once you fall through like that, you don't really want to be in it, which is kind of funny. But we filled this gap here, so that's good. We just have more gaps down here though. Like, this thing could just continue to correct after a little bit of a bounce spot. I mean, the theme is obvious here, so I'm probably not going to tweet that one either. Let's look at SQ. Similar theme. I drew a circle here, but it's really a you know, horizontal level, like right there. 1, 2, 3, 4, 5. See, I dip out at 200, and I was a little bit early. I think I was a little bit early because you can also draw a line like right here. So you have that one and that one. So, I mean, I understood that in the back of my head. I don't know if you can see that. Can you see that? Yeah, you can see it. Okay. So that's why I was like 3 points early, but I knew that we were in the area, the general area. The problem is that we also have this area down here around 180. So on a bounce back up to test 230-ish. Where are we at? We're at 216. Yeah, a bounce back up to 230. We can see it roll over and hit this 180 area. So maybe, like, you know, later in the week after a bounce play, we can start looking short on some of these names that look, you know, like they want to correct even more. At 180. Okay. All right, let's look at Grog. Grog, my baby. I'm just holding this one in my IRA. Not my IRA, my long-term account. It's not an IRA. But this demand zone, I think, guys, will be, for me, the place that I'm accumulating all my long-term shares. 30, 32. And also might buy Leaps long-term. I mean, we could also, yeah. So I'm just going to keep buying down here and then use this as my uncle point. Uncle means I'm out. 29. Take my profit and leave. So 29 is where I will cry myself to bed, and then around above this zone though, I'm still buying. I'm still a buyer. We did signal a little bit of a correction, obviously, when we broke down through this trend line and then back tested it. The breakdown through a trend line back test, bearish back test, and then flush. Actually flush deeper than you'd expect, deeper here. But looking to see some reconstruction. Hopefully we can close the week above 42. That's my plan. Grog. Come on, give me that chart. Grog. That trend line quickly back tested and fleshed. Now accumulating long-term options in the 32 to 35 range. 29 is stop. All right. What else we got? Oh yeah, obviously the ones that I've been trading. Snap. Nice chart. I mean, you can see right here, that's where the concentration of volume is. Right in there. That's where the concentrated volume is. I mean, obviously this is the demand zone lower, but the midpoint, I guess you can say, of all these candles is right where that fib is, right around 51. 51 bounce, 50 EMA hold. Now I'm looking for a nice little big bounce that we recover the 21 moving average. That's the ultimate goal, because we recover the 21 moving average and we're on that plane with all the relative strength stocks. So I'm looking for us to close above 62. And it's interesting because there was actually a lot of flow for 61 going into the close on Snap. So I'm closing my eyes. I'm not closing my eyes. I'm praying. But, I mean, look at that long wick. That's a long wick right there. Like, you turn that around the other way, and if you're bullish, you'd be out. No way. That's a nice little reversal candle. So that's what I'm looking at. All right, we got maybe a few more charts, and then we're going to call it a day. Snap, nice recovery of 50 EMA after bouncing at volume zone. Looking for reclaim of 21 EMA for some RS. Don't want a rejection wick there and close below 58. That's what I'm thinking. Let's read some more comments. SOS and Fubo. Oh man, SOS. Everyone's talking about SOS. I'm not a guy who can trade this stuff, you know. I mean, it's kind of tough because you got this fatty gap down. It already rejected once. And then, let's see, you got this line here. 416. Well, It's just so hard for me to interpret some of these charts because they don't follow the same rules as other ones with much more volume. Looks like I would potentially buy it around 416. Maybe worth a shot shorting it at, 10. Yep. I mean, like, all this stuff is all ugly right here. It's all ugly. So, yeah, I don't really know what happened there, but I remember seeing it on the tape a lot, but I'm not a good interpreter of these kind of charts. As you can tell. Okay, false breakout, lower. The cup and handle didn't really work out because of this false breakout. Like, this is where you would have thought it was going to happen. So let me just put that there. All right, we could get a nice little... Wow, what a weird chart. Okay, anyway. It looks like we could get a little bit of some momentum here with these wicks. Okay, so remember, we got some lower wicks. 1, 2. These ones were rejected. So, if we can get back above 30, 40, I would be interested in it. But, here you could try to play for a bounce 240. 25, below 24, no shot. Below 24, no shot. Okay. Oh, let's look at some DraftKings. My prediction definitely didn't pan out. We hit it earlier, but that's kind of cool. Close enough. More volatile than I was expecting. I mean, I kind of expect it to just follow this trend line here. Like, over time, like, you'll look back and you'll be like, oh, it kind of basically just followed this trend. But right now, I guess you can say that it's holding that line, actually. So, pretty nice, I guess. Yeah, I like this white line here. That looks like a nice line. You can see 1, 2, 3, 4 touches. I should draw that on my trading chart, actually. All right, so we're bullish above this line that I just drew. And we're going to call that our primary trend line because of the way that it's been holding the last couple weeks. Primary trend line holding. Think we can retest 72 eventually. Okay, so DraftKings on my list for trading probably next week as well. Okay, so Penn actually broke its primary trend though, which is not the greatest for kind of what you'd want in a sector if you're going to trade it. If I'm trading one name in the sector, I would like all the other names to sort of look similar in terms of where they're at. But this one broke lower. Now, we could see a bullish reversal here. A fake breakdown, bullish reversal. That would be cool. We'd have to reclaim 116. So, okay. We'll put that out there too. So, like, we're kind of like hoping for hoping this is a false breakdown and we can reclaim 21 EMA at 116 below that, and we can see much lower down to 90-ish. How are we doing so far, guys? I'll do win too. That's a good idea. Win has been a nice chart. We're down to 6. It's going a long time. Win. I like the chart. I mean, we got these lower hammers here. You know, and we're above this zone. The zone is from the gap. I think we can trade this next week as well. I would like to target. I guess we got this one too. All right, 145 first, definitely, and then we got 150. That's sort of the idea. Yep, that's the idea. Really quick and easy. Okay. Let's see what else. We're gonna close up shop soon. Let's look at some retail actually. Cost. Gotta check the health of the overall market. That is a fatty candle right there. Look at that. I should have bought that. My line was on point. Unfortunately, we broke through this insane like we could fall a lot. Like I mean like in a year time frame. I mean, we just gotta draw these lines here. Yeah, I mean, nice little bounce here. We could see up into basically a back test of this little channel, but I'm not sure it could reclaim after that kind of weakness. So it bounced where it's supposed to. Nice candle, but I mean, that's a big break right there. I think you know I was thinking about taking a long on the bottom of the channel, but I never did. Good thing no. Chart is damaged long term. Okay. Another chart that I was looking at was Walmart. Also did not. Wow, that was weird. It kind of adjusted itself. All right, it did bounce where it was supposed to. Maybe I'll look for a Walmart, you know, relief bounce. That thing had like 13 days down. It's insane. 130. I mean, so okay, so that's what I'm talking about right here with the confluence. Like, we actually do have a little bit of confluence with Walmart and Costco, which are both, you know, consumer discretionary, whatever, stocks, retail. And it looks like they both hit the same pivot at the same exact time. That's where you would see a sector bounce. And those sort of sector bounces are sort of what I look for, because those are like tailwinds, you know, when you're trading. You kind of would like to see that. A demand zone or supply zone retest, sorry. A supply retest around 136. So Walmart and cost, I mean, unusual plays to be certain. But the risk to reward right now, and by right now I mean as of Friday, is pretty good. Let's look at Etsy. All right, so definitely held here, 185. I broke the trend, but too hard to chart that right there. But it's, I mean, like, these sort of moves, like, you have, if once the pattern is broken of bull flag, break, bull flag, break, then you have to sort of wait to see what other pattern will emerge for you to actually trade it. Let's look at some. We're gonna look at the saddest chart of them all. It's so sad because I recommended the stock to someone and then it just like crashed after earnings, but I would still buy it right now because the earnings report was not that bad. Okay, anyway, looking at the chart from a technical perspective, we broke. Once you break, man, rising wedge break, those are brutal. Those are probably the roughest one. Oh shoot, have I been? No, I'm good. Okay. Those rising wedge breaks are tough, but we are holding, you know, this area right there. Gotta make it green, and should have bought long term there. But let's see, we can get 24, 25 again. 25 is resistance. You have 1, 2, 3, 4, 5, 6, 7 points, I guess, of resistance. So, you know, that is gonna be rejected at least once. We're going to look at RDFN too for some sector analysis. Those rising wedge breaks can be brutal when fulfilled. Okay, we're gonna look at RDFN, which is another Redfin, you know, these real estate things. Wow. Yeah, that's a weird chart, man. Really weird chart. Because you have like a false breakout, and look at this thing. Like, this is what I'm talking about right here. You got like, oh man, how do I explain? Okay, yeah. We have extreme bearish divergence on the chart. Okay, so when you bull flag break like this, like let's just like focus on that much right there. Okay, when you bull flag break like this, you want the RSI. I'm gonna pound my mouse to pound that into you guys. You want the RSI to confirm the breakout, because it just means that the buyers are getting tired at that point, and you don't want tired buyers on a breakout. That's like that's like something you really don't want. And you could see tired buyers without the RSI based on the wicks. That's why I'm telling to warn you guys about these wicks. Like, you see wick. It's like wick wickety. Where's that from? Wick wickety. Oh man, it's gonna bother me. Oh, it's the guy. It's the coach. It's the mom from Holes, I think. No. Oh, I gotta look it up. Wickety. No, man. I don't know. Someone please help me out. Anyway. Yeah, I don't know. You want the confirmation on the RSI. If you don't get that confirmation, you can be in for some rough times ahead. And here we go. Here's the rough times right here. Break back below what would be the bull flag trend. It tried to hold for a second, but it really could not. So we have a retest here of 56. I think, you know, the risk reward is fine, but long term it's kind of awkward. We are basically like, none of these candles, like, I can't believe we had, what is this, like 15 days in a row, no red days. I mean, we have to fill those. You know, fill is like, you know, come down and test the conviction of those buyers at some point. And this is what it looks like it's doing right now. We could see, honestly, like a little bit more of a fill all the way to right there. 50. I'll buy long term for sure. Okay. But right now 56 is your risk. Target can be 70. Maybe a little bit lower, 68. Yep, 68. Anyone know? No comment on that? Now 56 is support. Okay, so that sort of bearish divergence play with some sort of resistance level, whether it be trend line, this one is a fib level resistance. That is sort of what I am looking for to go short on a swing. And I did it with Goldman, and I could have done it right here. So anyway, I didn't see it in time, I guess. Okay, a couple more charts, maybe like two more. We can look at some. I like getting different sectors in. I don't think we did enough. Maybe enough chips. Let's go AMD for one of them. Anyone have a final suggestion? Put in your final suggestions now for a chart. AMD cup and handle failed. That's not what you want to see at all. Retested that. Wow, I didn't even know we got back into 73. That also would have been a nice little dip buy. But again, it's not really a chart that I'm interested in. I'm going to let you guys comment for the last few charts that we can do. Apps and Twitter, those are good. Two good ones to end on. We're going to end on apps and Twitter. Okay, Twitter filled the gap, closed above demand, closed below the 21 EMA, closed above the 50 EMA, and then we have like this area right here that would be, if we fall back down, would be where you would expect it, 55. Let's look at, I think the Twitter long time chart is actually much more interesting because of basically what happened here at the high, 75. We couldn't really sustain buyers above 75 and it fell below. So I think it might need a little bit more consolidation, to be honest, because of that at the high IPO test, IPO at the high. I like the fact that it filled the gap. Less chance of, or it more establishes that as a demand zone. So we can make this little one green, I think. It was speculative green. Now it is green. And I think I want to change this IPO thing to something else, a different color. Let's go now. Let's go orange. And let's make it a little bit of a lighter orange. There we go. Okay, demand zone held. Now, what I would like to see is it hold basically like right here. 1, 2, 3, and then the close above. So that is 66. All right, we get 66. We can see like right around here, lower. 1, 2, 3, 4. Yep, 5. Boom. All right, so 66. We can see 72. That's sort of the idea. It's a mini consolidation zone. I probably won't tweet that one either. Apps. Rough one, but we're holding this 2.618 retrace, and we're holding essentially this gap right there. So I think as long as we hold the gap, like we're okay. I'm going to take off this actually. It's not giving me that much information. Yeah, we're holding this gap. I'm okay with that. Let's draw another line here, connecting these. Nice. Okay, so we're still in an uptrend. That's basically what I'm taking from this. I like the uptrend. We had a little bit of a false breakout though. Let's go like that. But we're basically back testing the flag. So back test, good entry long, I think. That's another one on my list for this week. All right, guys. I will do one last one, Cree, as a suggestion, but after this one, we are going to close up 2-hour charting session on the dot. Cree is a good one because it's a different sector than I haven't done. Apps back test the breakout of flag, which initially failed. Decent long entry in one of the few uptrends I see. All right, Cree. All right, so initially I just see this demand zone here. Obviously, got to make that green, not orange. Let's move it up a little bit too to like right there. All right, let's just draw this fib here too. Make it more obvious what we're dealing with. We got that. We got a secondary fib here. Kind of an awkward one, but let's make that white. All right, so we can see some more information given to us. Demand zone held 105, below the 50 and 21, and still far extended from the 200. Not my favorite setup because of the, I mean, we have this sort of like, you know, downtrend ish in the buyers. It means that the sellers have taken over this chart for now, but we're holding the demand zone. That's what's important. I think we're in for some consolidation on this chart. That's my takeaway from that because we have way too many mixed signals. All right, guys. Thanks for joining my first live charting session. Drop a like if you guys learned something, if you guys appreciate this. Can also leave a comment in the YouTube video. I appreciate you guys for watching. And good luck this week. My basic takeaway is that we are going to bounce Monday, Tuesday maybe, and then after that consolidation or it's a bear flag and we're going to sell off again. So we'll see. All right, y'all. Take it easy. Have a good one. Peace.